As a buying opportunity, let's bring in Anthony Chukumba of Loop Capital. He has a buy rating and a $370 price target on the stock. Anthony, so there was this restatement. The filing had what looked like some pretty material adjustments to what had been stated earnings based on the treatment, I guess, of various accounting measures, right? It was about debt repayment and things like that. Does that not give you a little bit of pause about the quality of the earnings from here on out?
It really doesn't. I mean, let's be clear. I mean, management clearly has some egg on their face here. But at the end of the day, these restatements do not affect revenues. They don't affect EBITDA. They don't affect assets. They don't affect liabilities. They don't affect debt. You know, they basically, made a couple of accounting mistakes, but does not in any way, shape, or form affect the underlying fundamentals of this business, which continue to be quite strong.
The underlying fundamentals being strong, I mean, it seems as if they've had a little bit of difficulty with the maybe pull forward of demand over the pandemic, and then a little bit of a hangover effect after that. Does it trade with housing related? What are the drivers of this business that you think are poised to be strong, given the fact they did have some muted guidance?
Well, you have to put that number in perspective, though. So in 2019, so that was the last full year before the pandemic, RH did $2.6 billion in sales at a 14% operating margin. They are tracking to have done $3.6 billion, so $1 billion more in revenues at a 22% operating margin. So let's not get it twisted. They're having a very, very strong year. Now, clearly, the sort of weakness in the high-end housing market will hurt them, but I'm really looking at this as more of a long-term play.
And is it the area within retail? I know you also cover some of the discounters and dollar stores and things like that. Would this be a place to focus within retail at this point, or do you think that because of macro issues, there are other areas that might be better positioned?
Well, if you're talking about near term, I mean, yeah, clearly I would go with more sort of defensive names, like, so for example, we really like Dollar General and Dollar Tree. Those are names that will definitely outperform fundamentally, and I think the stocks will outperform in a sort of more rocky macroeconomic environment. RH is more of a name that we like long term. And look, don't take my word for it. If it's good enough for Warren, it's good enough for me. Berkshire Hathaway is the second largest shareholder. They own 10% of the stock. And by the way, the largest shareholder is the CEO, Gary Friedman, who owns 14% of the stock.
That is true. I'm not sure if we know if it's Warren within Berkshire. I remember years and years ago, not to paint it with the same brush, but they also own some Pier 1 in the home furnishings area. But no, your point is well taken that there is some sponsorship of the RH story here. Anthony, it's good to talk to you. Thank you very much.